Yes, the chat is not working. Let me see if I can. Mauricio has. Oh,
All right, welcome everyone. Hope everything is good and you're having a great day here. So, fortunately, I'm not able to open the chat here, so I won't be able to see what's going on and who's there. So let's see if we have any options here. All right. Okay. So welcome everyone. I cannot see who's on today. I hope you had a great day trading or non-trading day. And as you know, this is the FX Tokyo Open live room. Daily. This is a daily show featuring the Forex market and not only. As you know, I like to review the SP 500 and some commodities as well, gold and silver particularly, because I believe they actually work very well with my method. So if I have an edge in those, I want to take advantage of that edge. All right, so let's see if we have any options um, for the chat. And if not, I will go on, and it's going to be kind of blind. And if you have any questions, you might want to send them as emails to fibstalker@gmail.com. And if you want any markets to be reviewed, you can send the pairs to my email fibstalker@gmail.com. I want to say hello to everyone. Hello everyone. Thanks a lot for joining in today. So welcome to the FX Street Tokyo Open Live Room. Today is Tuesday. It is April the 12th, and it's 7:05 here, 7:04. This is a daily show from 7 p.m. to 7:45, where we features real trading at the very heart of the Asian session with me, FibStalker. As you know, I take risk seriously. Indeed, actually, I want to remind you that. So we're going to look at another way to make the audience able to have a chat. So bear with me. We might have that during the show here, but we will continue. Again, if you send me by email your questions or pairs, I'll review them. And actually, I received already one. So go ahead, fibstalker@gmail.com. Now, sometimes people approach me and say, Giuseppe, it's 15 years, 10 years, 20 years, and not successful in trading. Why is that? As I mentioned yesterday as well, it is impossible that you will not stamp over a successful method in 15 or 10 or even 5 years, all right? So the very question relies in how you manage risk. It's all about that. Trading is a business, and if you don't manage risk, as would happen in any kind of business, you are doomed to failure. So trading Forex and its derivatives, futures, options, and CFDs and other instruments or retail of exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You might lose all or more of your initial investment. Never forget that, especially if you use leverage. Indeed, I don't use leverage. I have 1 to 200, but I risk always a percentage of my account. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the risk disclosure on the website, and by all means, actually check the new website as well, which is quite exciting. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decision. And this is very key. This is key. All your decisions, they come before you even put the trade on. If you remember, yes, and I will touch on that a little bit. When we looked at the long in silver, we knew what was the area of potential support, and we knew the first target. We knew where our move where our idea is wrong and price is moving against us. We have all this information. The speaker, myself, and other is merely providing this material for you as general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated and FSRE, will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. So thanks a lot for joining in. I want to remind you that I have a coaching program. It's going to start at the beginning of May. If you are interested, thanks a lot for all kind and warm response. I still have some spots left. I usually don't get more than 15 people. So if you're interested, just let me know. I will extend a little bit the current offer here, and you'll find information also in the box above the window here. So let's dive into the market. That's what we are here for. Let's look at the charts here. That's me. That's not the charts. And let's look at our charts here. There we go. And you see on the screen here is silver, but before we get there, just want to show you here, as I mentioned yesterday, I didn't trust the move lower. The market really didn't move strongly lower as you would do if you were to test the 95.55. In fact, if you review yesterday analysis, you will remember that I mentioned that this market could actually rally higher and maybe even print higher highs. Because of the current scenario here, no need to panic. This market might offer an opportunity for shorts. We don't know that just yet. And if it does, I give you already the level where in a short you would take profits. Okay. With current highs. We will update that level if current highs actually are pierced on the upside here. All right. So at the moment, a scenario for a double top or similar configuration, although that's not the way I look at markets. I look at these levels here, these areas of potential participation of algorithms. And we got that participation today, as you can see, with a full green bar here starting in the morning. I'm not going to touch on silver, similar as gold, similar as silver here. And we had another day, I suppose, if I recall well, my M Fundo yesterday has asked whether I would have any clue about the containing volume on this market, and my answer was no, I don't. That's not the way I look at the market. What I know though is that 1660 is looming on the upside here, and that's again for those of you who are involved and long in this market. I have a few followers and students who are, including myself actually. That just to remind you that 1660 is going to be a level where you want to get some partial profits. And thanks for your comments here. I have Todd and Pankai, also Japanese yen. Greg, loving the silver rush. I'm loving that too, Greg. Is this a valid extension setup? And that's something that it's related to to US dollar Japanese yen here, and we will review that in a moment here. Okay, so congrats to all of you who actually took the trade here and held the trade again at the beginning of April here. This is becoming real. It's getting where it should be getting to, and that's our 116.60. If this market keeps strong, I mean keeps being strong, it is sure that some of you would indicate all this area as an area of supply. However, that's not the way my model works, and there is the possibility for this market to get into that second target 17.15. Okay, so I will actually remove this area here, just focus on our levels. All right, so it looks like there is a lot of interest on the US dollar Japanese yen. Thanks, Bankai. Review on the 4 hour. Todd, thanks Todd for writing. Can you review the pair? Thanks for being in the room, Todd, and thanks for your email. All right, so it appears that we all want to know what is happening in this market here, and it's all good, it's all safe. Um, this market is correcting on a it is just correcting here. It's I don't see any particular issues in this market, and as I mentioned, the 108.96 would only be valid if the market, as I mentioned yesterday, would actually test, which means touch or go below the 106.92, which didn't happen here. All right, so if we kind of go through how we actually model this market here, you will remember that on the weekly time frame we have this trace here that lines up with that second target that we have there, and you know there are two other trays that we need to keep into account here. First one is the same anchor to new lows here, and that seems to me very aggressive. However, that would be a great that will certainly not be an indication that this market as a reverse is now moving higher. If we get there to 112.75, which in my experience, although I don't know what's going to happen next in the market, I can tell that seems very unlikely to me. So I will actually so just want to remove this. I would actually consider that as a very remote possibility. And there is another level that is very close, and that's a test of 109.35 there. And that would be before we get into that level. So you have to be very careful here. If you're adding to this trade, you have to keep in mind that we might get actually 109.40 area tested, and that will make for a great trade. Now, just let me show you one very relevant consideration. Can you see that? If price gets into 109.35, first of all, you have to get very interested in a continuation short, and I will for sure. I'm just waiting for in this market for a strong valid daily level here. Not rushing into the market yet. And if we get there, as you can see, the first target lines up with that second target, and so we will make some consideration if you keep following on what could happen next. Those who follow and know how I model the markets, following the coaching program, they will know how to follow up on this. However, I'm giving you here, as this market appears to be strong on the 4-hour time frame, that this is a continuation short on the daily, and it's visible on the weekly as well here in this specific case. So if price gets into 109.35, my guess is that we're going to see a continuation lower here. So I'm going to watch this market, and again, some people might identify this as an area of potential supply, or you name it. Let's not do a look at the market. As you can see, I only look at these areas that are traced by looking at the way the market reacts to specific levels, and we strongly believe, we have proven that, and we have demonstrations, especially in the second module of the coaching program, that show how this very model applied in the past as well. And these models, it is my strong belief, they model something fundamental about the market. So they model part of the psychology, an important part of the psychology of the market. Right. So, but here we are interested in, okay, Giuseppe, very nice words. What do I do with this market? And that's what what I'm interested in as well. Right. I mean, all this analysis has to lead to trading. Otherwise, I mean, we're just playing here. All right. So the next level, if this market continues higher, is to consider the 109.35 level here. If the market just reverses and gets into that second target, what we said yesterday still applies. Keep that in mind. All right. And you understand the importance of this level now, and there is a reason for that. Okay, there's a sequence of measured moves, and there is a set rules that set of rules that justify that level being used to model how algorithms are going to impact these markets. As you can see, again, I'm giving this value, this level, probably 1 day or even 2 days in advance if market gets there. Can you see the shift in our mental shift here? We're not saying that the market will get there. See, we're saying that if market gets there, we are going to do some tests, and we're going to possibly take a short position in this market. Can you see how different is our approach to the markets? And if it doesn't, nothing changes, because we have a plan also if this market keeps moving into that second target. All right. So no drama, and no no nothing to worry here. There is, on the 4-hour time frame, there is there is a sequence of measured move here, and there is a level here that has been broken, and it could be respected here. But I believe that, and obviously this level is getting participation at the moment. I think Pakai had a question on this. I do not consider this level relevant at this stage, and I'm going to stick to the trace on the daily time frame, which is the one that I just showed you. And this is the 109, I'm showing here to you, as well as on the daily time frame here. Okay, so once again, the plan is clear, it's there. If the market moves lower, we're going to get into that second target we mentioned yesterday. If the market moves higher, we're going to get involved short at 109 or around 109.33. Now, I want to make a clarification here, because I saw some discussions in relation to risk-free trade. Okay, there is no risk-free trade at the onset of any trade. Any trade you put on, there is a risk. When I speak about risk-free trades, I'm speaking about the possibility of rendering or changing that trade into a risk-free trade. That cannot happen until the market moves somehow, somewhat, somehow in our direction, all right, in the direction of the trade. And only if it moves in the direction of the trade, for an amount that matches risk, the initial risk we have, we can generate a risk-free trade. So the don't quote me saying that I say that there is the possibility of risk-free trading. No, I talk about risk-free trades, which is totally different. Trading cannot be without risks, like any business. However, when I talk about risk-free trades, I'm specifically mentioning that around these levels and these areas that you're capable of identifying using the methods of the FibStalker Methods coaching program, you will be able to, with a high probability, generate a risk-free trade, which means that you will have an initial risk in the market in response to the activity of algorithms in these time frames in this area will push price enough in the direction of the trade that would be a short here to generate for you a risk-free trade. Okay, so I hope that this clarifies once and for all, because sometimes I get quoted that risk-free trading is impossible, and indeed it is impossible. I talk about risk-free trades that become risk-free after a period of time. Okay, so I just wanted to clarify this because I believe it's important. So 109.35, it's my area of resistance here, quite solid if the market gets there. If the market does not get there, we have plan B, and we'll keep waiting for this market to bounce after we print a low right on top of that second target we saw yesterday or below. All right, and so if you have any other questions in relation to this, I will pick them up in the summary. So for now, we will continue, and I want to continue with a market that it's particularly dear to me, and this market is now reaching actually today has reached the second target of that measure move. As you know, at some point I was continuing bull on this market for a reason. This is the weekly time frame of the US dollar, Canadian dollar, and those who follow me know that we modeled this market on the weekly time frame like this. So we had an extension, first and second target, and we had initially the market responding to the next extension. And I was, as you will remember very, very well, I was projecting a 158 or at least a 152. It never happened. The weekly didn't show up when they had to defend this level, and so this market started its move lower. And people do not understand that you can have an outcome which is confirmed to you by market behavior, which is this response that the market gave on top of that level that I just showed you. And those who follow me and my students know, and they have as well taken risk-free trades right in this area, okay, to try to push this price higher. Once market has pierced 135.40, there's no business for longs. Indeed, there are no longs, weekly longs any longer in this market until we get into 120, 120.60 here. And that's the reason why for this continue move lower here. And that's kind of scary to some because history also shows that once a market gets above the midline here, it tends to retrace all the way to 159. And indeed, I had some discussion with people who stick to the view that some fundamentalists have. Some fundamentalists were projecting 161. I said, yes, we go there until we don't. We go there until we have support from the weekly time frame. Once the support is gone, that scenario is gone, because there's not going to be anyone who's going to push that price higher. And we need weeklies, participation of weekly smart money and algos, big money on the weekly time frame in order to push the price higher. All right, so that is not happening, and this market is very technical market. I mean, it's a bless and sorry, it's a blessing, and those who have followed the way we model this market initially, after the fact, and then at some point we were capable of identifying the sequences of measured move here, and the currently this market is very technical, and as we can see here, and for those who are new, let me just remind. Now notice that this is a weekly time frame, so if we get to the right hedge here, right? Once we saw that low and we traced that lows to lows, this level was there 2 weeks before it was tested. Actually, more than 1 week, because it was tested during the second week, as we can see here, right? So what we are saying here is that on the weekly time frame, we had this level probably 7 to 9 days before it was actually tested. And look at what happened when it was tested. And if you don't believe that, I have a little proof for you. Indeed, that very day, let me make a search on FX Read here. I just want to show you that very day, I was actually, and I may cover a little bit the charts here, but bear with me. And what I want to do here is that the very day, I think it was a Thursday, and you can review that by yourself. This area here, that day, during the second test, I was having a webinar, and I want to point you to that webinar so you can actually review as I was commenting the trade right away, and that happened exactly while I was doing the webinar. But as you can see, this is the weekly time frame, right? On the daily time frame, sorry, this is the daily time frame. So yeah, I said something stupid before, because what I said is I was looking at the daily, believing that it was the weekly, but it was the daily. So I actually provide this level with 1 day in advance. Okay, the market reacted very quickly there, and I invite you, especially if you're a premium subscriber of FX Trade, to go and review one recent webinar. I can tell you exactly the date that happened. That was the 16th, March the 16th. At that day, if you go on FSG, let me share this with you. You can see and check. Let me see if I can switch to this other screen here. Here we go. Bear with me 1 second here, and now you should be able to see here the screen here. If you see here 2016, on March 16, you can go and review the Forex market quarterly review here, and during that review I called for this second test on a smaller time frame. Mind where this setup broke price to, it broke price into the first target, as you can see, didn't get into the second target, and obviously what happened is that, you know, as we know how algorithms work, we know that we are able to capture the next measurement. This time that came 3 days before the fact, and look at where it went today. Beauty. Now you have to weather all this if you want to reap the big results. Okay, you might have here on this market a 30 pips stop, but man, 132.80 to 127.53. This is 550 pips here. Divide by 30, you can well understand that we are in the region of um, 18 reward to risk. And these are the kind of trades that we like to take, and I suggest you should be looking at, because the money is really on the big moves. And that's exactly what we did when we trade back. Let me bring you back to the US dollar Japanese yen here. Those who followed the room and who followed me took this trade here, which was the 121. And I remember there were some commentators who were projecting price of US dollar Japanese yen to 130 at the time. Okay, no, nope. The market went into the first target, and eventually is now testing the second, tested the second target as well. But we took our trade off at 114. Okay, and that's a sizable. Sorry, this is not to boast. You can see these things mentioned well before the fact, is to say that if we are capable of identifying this level well in advance, then we can take advantage of this kind of moves. Okay, the reason why this model works is because, as I mentioned, these market models class of algorithms are very powerful, as well as these models actually incorporate, or if you want, they model an important part excuse me, of the psychology of the market. So that's the reason why we show that working. So sorry for this brief um, uh, digression here. So where do we go next? How do we trade this? All right. So obviously you had to be here and you had to be here if you wanted to take advantage on the daily time frame. Of course, as I mentioned before, I repeat this analysis on the smaller time frame as well. That's not something I feature in this show, but in this show I give you in advance levels, as you already know, and as you're going to see as well, that you can use for your trading. And in this case, this market has touched the first target. There are two possibilities for this market. One is to put a small retrace and then a continuation lower into the second target. There is also a possibility for this market to to come again, to retrace 90% of this move lower as you did before, and trade the 131.982. I don't believe this is going to happen. Well, sorry, I should rephrase, because we cannot ever say something like that when we deal with the market. Indeed, we cannot say I do not think, or I do not believe something is going to happen or not, because all right, so apparently we have the chat back. So thanks, Daisy, for the information. Please, to all of you, please refresh the live room page, and we should be able to actually communicate a little bit better here. Thanks a lot for your patience, and if you refresh your live video page, you should be able to get the see, should be able to get that. All right, so I think you're seeing me here. Hello. So maybe maybe you have not seen what I've shared here. So let me just quickly repeat for you. So what I mentioned is that we had this measure move here, 1, 2, 3, more than 3 days in advance. This level was known. The high, it's in. You enter with a stop above highs. You enjoy this move lower to previous low, and then eventually to the first target. Okay, so that's where what I mentioned before, if you didn't see me. All right, so let me see if the let me see if this is on. The chat is on here, and very quickly, so I can say hello to everyone, and we can continue. Still have 5 minutes here, so and it doesn't look like it's responsive here, so bear with me a moment, and let me see if I'm not sure. I'm not sure that actually is actually working here. Let's see. All right, bear with me a second here, and we will continue the analysis. Just stay excited if you can. All right, so let me join from FF Street. Let me see whether we have that chat working. All right, my phone is of course there, so we will leave it there. All right. Okay. All right. Okay, I'm not sure I can open that. I'm not sure whether you can. It doesn't seem to me that that opens up. So let's see. All right, so I'll just continue here. So how do we trade this US dollar Canadian dollar next here? What do we do? How do we take advantage of this opportunity? And what this market is doing at the moment. All right, so in order to understand that, we need to first of all, I mean, let's look at this price, very extended, and this price could just drop like a rock here, and that's the reason why we have to get involved in those levels if we want to take full advantage of these moves. If we get a retrace here out of nowhere, really, yeah, some people might say yes, there are previous highs here, but again, that's not the way I look at the market. You can get bounces occasionally on top of these levels, but you can never bet on it. I would not just when we have this kind of scenarios, really, where do you put the stops, right? Does this give you a place where you should put a stop? See, this area gives me a place where I should put up a stop. Why? I mean, a logical place, although a lot of people don't like that, would be previous high. Why? In these scenarios, the previous high is a much better choice, right? Some people would not like that. People say, previous highs are typical areas where professionals go and fish for stops. Did they do it here? No. Did they do it here? Yes. And you would be stopped out from a previous position and then re-enter again. And if we happen here again, you would be stopped out and in a retest, re-enter again. If you know where that level is, because if you don't know where that level is, there's no way you're going to capture that. All right. So going back to what can happen here. So if we get a bounce, my belief is that we might get a shallow bounce here on the daily and then keep shorting this market, right? Otherwise, this market will continue lower, and we know where this market is going. Where this market is going? 120.50. It is not going because he has to go there. It's going there because there is no buying from the weekly time frames in this market, and the only area where some buying will show up, might show up, is 120.50. So that becomes a very high probability area. All right. All right, so let's make a check here. I hope you liked what you have seen here. We didn't touch a lot of markets, and it's unfortunate that today again the chant didn't help us, but it is what it is. We are happy also with the little bits we get. All right, so I will start a summary of this session right now. We started with the SP 500, and as I mentioned yesterday, this market was in a value area here, and we saw, and I mentioned that we could see a retest of previous size double top, and that's apparently what this market is, how this market is behaving here. It broke the sequence of measure move lower early in the week, so we had I had little doubt on the smaller, on the smaller time frame. This sequence down has broken, and that gave me little faith for a continuation lower on this trend. Okay, indeed, yesterday I mentioned this area. The market just respected that area, and it's pushing higher now. Where it can go? Well, it can go to previous size into 2089 here. Of course, any weakness of this market on the daily will be noted, and it's still possible to initiate a short if this market shows shows weakness here, but that shot might be short-lived, and this market is still behaving as it has been behaving in actually in the same period last year, right after that big move higher. And this market started, I believe this might be distribution as well, distribution area where Wall Street is preparing the cows for the next move lower. Will it happen right now? We don't know. I don't know. But what we know is that we're going to capture it. Even later, we're going to capture it, and we're gonna profit from that. Is that ethical? You tell me. It's much more unethical to not understand uh, that your pension is tied to a market you do not understand. So I believe not understanding, and I'm not talking about you, specifically you in this webinar, but generally the larger population. I think it's unethical to do not understand something we all profit from, which is our pension plans, which are all tied to the stock market. All right, so that's very unethical to me, especially for people who have the the intellectual resources, mental resources to understand what's going on or to learn what's going on. All right, despite this little pep talk here, I will continue on very quickly on gold. Gold lateral move continued higher. Silver is relatively stronger. If you go back in my previous commentaries, you will learn that I always say that silver had some catch-up work to do compared to gold, and it's printing higher highs while gold is printing lower highs, and I believe that catch-up is happening, and we should see this week probably this market at 1660. All right, then despite the issues we had with the chart, thanks for your patience. We actually reviewed the US dollar Japanese yen here, and we mentioned an important level, that's the 109.36. Be careful in adding to this market, be careful with short, that's not time yet. If the market gets into 109.35 and we get a FibStalker timing signal, that's the time to get involved. Above 109.76 we might see a higher level. Okay, so it's always very important to test these levels. I have a procedure for that, which is called the FibStalker timing. So above 109.76, believe it or not, 111.20 120 it's possible. I don't think that we will get there, but what I think is certainly not important. Mr. Market will do whatever it has to do, and you have to respect Mr. Market. Surely I do. All right, so finally, we reviewed US dollar Canadian dollar. This market is in a continued move lower, accelerating. We're going to get to 120.60 very quickly here. And this might happen in a few weeks. Don't think this is going to happen in 1 week here. This is 1 month or more work to be done here, but it's definitely accelerating. And we mentioned levels that have traded in the past, which we were able to identify between 1 plus to 3 plus days in advance on the daily time frame, and surely we would have. I got an advantage of the first opportunity. The second one I was preparing for my holiday, so I was not there. In fact, it was the day I left and to Italy. So if you keep following me on this show, I hope this you find this interesting, and I will. Uh, I will definitely keep looking into this market and provide you with setups that are workable, and you can keep in mind when you want to take advantage of this continue move lower, as I mentioned, into 120.50. All right, so thanks a lot for being here today. I hope you found this interesting. We only reviewed a few markets today, but it was a deeper review, and for those of you, and I see that a lot of you are interested to the US dollar Japanese yen, I gave another level that you should be watching, so do so, and I wish you a great day for tomorrow, and tomorrow we will continue and we will have the chat. I'm leaving you with a slide that reminds you that I'm a contributor to FX Street, and I will have my next webinar on April the 25th. And I'm also recruiting at the moment for my FibStalker Methods coaching program. This is a 12 months program in 14 modules. The first, and in 3 main areas. The first area, I lead you and guide you through the understanding of the mechanics of price and how algorithms actually govern some of the markets, not all of them, but markets where the volume is very, very high, and so these algorithms can actually have enough volume to work with. The second part is related to the identification of trading systems by putting together all the concepts and elements that you learn in the first part. And as part of the second area, I also provide a complete process to identify these levels, starting from the weekly time frame down to the 15 minutes time frame and the 1 minute time frame for timing. And I also provide a process for price discovery. As part of the coaching program, I give 7 trading systems based on the FibStalker Methods coaching program concepts. And the third part concludes the coaching program, and there I guide you through the process you have to follow in order to become profitable, and on top of the profitability, build consistency as well. All right, so if you're interested, drop me an email, click on the button above, and let me know. I still have few spots left. I will not go over 15 new students, because it's quite an effort supporting traders, new traders, and developing traders for 12 months. All right, so thanks a lot, and I'm going to see you tomorrow. I wish you a good evening, and bye-bye now.